Last FOMC meeting minutes. The last FOMC meeting. They raised the federal funds rate by 0.75 basis points. For those of you guys that are new to this, 75 basis points seems normal. It's not. I mean, these are raises that we're having 2 back-to-back. That hasn't happened since most of you weren't even born yet. But a lot of you guys are new to the market, and the volatility, it may be the new normal. Like, I'm not trying to say, well, this is not going to last. Like, all the people out there like, oh, this isn't going to last. This is not the way the market is. It'll get back to normal. What if this is the new normal? Because remember, everything changes now. Information is transferred in milliseconds. Everyone can, as brokerages, 0% fee. You know, phones have that. It's a different world. So maybe the volatility is here to stay. We don't know, okay? Now, the target, according to the Fed, is they want a 3.25% to 3.5% federal funds rate, which is very high, okay? Very high. I mean, this is stuff we haven't seen since we came out of inflation in the 80s, all right? They wanted that. How do we get there? Well, originally they were going to average a 50 basis point or more increase every single meeting until the end of the year. Well, last meeting, we ended up coming out and we saw that a lot of the federal the Federal Reserve presidents were actually much more hawkish than they normally are. Some were saying we may need to go as high as 4% overall or more. Some were saying we should go to 3.5%, but we need to keep it there for a lot longer than we originally thought to keep the inflation coming down, to keep everything going. But the workforce is there, whole 9 yards, right? So we got this real hawkish attitude coming out from June. Today, we have minutes releasing from the July meeting. This was 25th through 27th, I believe. Like I said, guys, I'm trying to remember everything for months and months of info. There is no meeting in August. So that's why this is going to be a big one. You've got a whole month without a meeting. September's the next one. The reason that this meeting is going to be a little bit less consequential to me personally as an investor is because this meeting happened before a lot of unexpected economic data dropped. Now, before I go into this, please understand this economic data that came out is single month-over-month and year-over-year reports. It is not necessarily a trend, but a lot of things. Now, one thing everybody's talking about is peak of inflation. Now, I did a YouTube video, is inflation peaking? And the answer is yes in some places, but no in others. All right, and since we had this meeting, several things have come out. Number one, GDP, down again. Now, that used to be the definition of a recession, 2 quarters in a row of GDP contraction, but they've changed the definition. So whatever, GDP has fallen. Jobs unexpectedly doubled. Non-farm payrolls were expected to be an added of 260,000 jobs. It came in at 528,000 jobs added. CPI, not core CPI, but CPI also fell. That is your inflation. Now, for me personally, it's bullshit because that drop was all gas, because the June CPI report, gas was like almost $6 per gallon in the US, and then it was under $5 per gallon when the report came out. So that's a significant drop, and CPI takes into account gas prices, right? Core CPI takes food and gas out. Gas was down, but food is still skyrocketing. And I went over a couple mornings ago in the call with you guys about all those numbers. Food is going absolutely insane right now. So it's offsetting, but the core things, food, energy, and shelter. Energy slightly down in the US because of gas, but natural gas and stuff is starting to go back up again. We just saw the highest since 2008 at $9 per unit on natural gas report this morning. Those of you guys who have been playing Boyle and UNG with me after it dipped every time, it's going insane right now. Food is up and shelter's going insane. So we had GDP down since this meeting. We had jobs up. We had inflation down. But then another thing. Remember, the Fed's job, monetary policy. Not fiscal policy, but monetary policy. Their job is on the demand side. So inflation, which they missed out on last year when they thought it was transitory, is not so transitory. They retired the word. Now they're looking for a soft landing, okay? Which is very tough to do. You're trying to combat inflation while not killing economic growth. How do you tell when one's going over the other? Workforce participation, labor force participation, purchases of small items versus needed items versus, expensive items, non-necessities versus, assets for investment. There's a lot. So what they're looking at is raising rates to shore up the demand. Now, demand is where money is more expensive, So less people borrow money, meaning less big purchases take place, meaning that the supply that they can't control, but if the supply is the same and demand goes, then it'll drop the price. That's where housing comes in play. Moving back, we're not talking about equities. Equities are a whole nother thing. Bond market's a whole nother thing. Housing, what did we see? Last year, rates dropped, 30-year plummeted, 2.85%. Out of nowhere, everybody and their brother was like, oh shit, I'm buying a house with these cheap levels. Everybody started buying houses. Well, all of a sudden, less houses on the market, houses going quicker, people started offering, more money than they were worth. And that drove up all the prices of the house. Your comp sets went up. So then housing prices skyrocketed. And it continued to skyrocket till rates started increasing. So wait, the Fed's doing their job, and it's working. Mortgage rate went up to 3%, 3.5%, 4%. People were still buying. Housing market stayed high, 4.5%, all the way up to 6%. The difference between 3% and 6% on a $300,000 house over 30 years, double the value of the house. You pay an additional $200,000 just in interest on your home between this and this on a $300,000 house. So if you buy a $300,000 house at 3%, you're going to end up paying $500,000, almost $600,000. Let's round up for aesthetics. You're going to pay $600,000 on a $300,000 house. So $300,000 of that is in interest. Okay, so in 30 years, you'll have paid $600,000 on that. The difference between 3% and 6% is now you're going to pay $500,000 in interest on a $300,000 house, which means you will now have sunk $800,000 into that house, hoping that you get your money back or break even. And that's not a problem, except for the fact that housing prices were so high. So now instead of buying this house at $300,000, you're buying this house at $450,000, which is $150,000 over what the value was a year ago, meaning that at this rate, you're going to end up paying $800,000 at 3% and $1.1 million on this house that was $300,000 a year ago because of the overage. So what does that do? People are like, all right, you know what? I'm going to sit back. I'm going to chill. I'm not going to buy a house right now. I'm going to wait for either the price to come down or the interest rates to come down. So what does that do? Here's the other problem. Well, God, Stocky, that's good because that means that housing prices are going to go down. Didn't you show us all those houses that are for sale now and how 63,000 purchase agreements were withdrawn in the past 30 days? That's insane. 63,000 people were about to buy a house and they withdrew it. Isn't that awesome? Well, mortgage rates went from 6% down to 5.2%. Now they're back up to 5.5%. So something's going on here. Rates are still going up. But here's the thing. Here's the catch. If housing prices or rates, which went down and came back up, don't go down soon, what did we talk about last week or on Monday going into yesterday? People are going to stop building houses because there's no demand. If nobody's buying and nobody's selling, there's no reason to have massive building projects going on. So what does that do? Lumber prices are falling right now, which is great, but nobody's building houses. So then what happens is all the builders, we were expecting housing starts to miss yesterday, and they missed big time. The amount of houses that were started last month versus the month prior, down significantly. And here's what happens. Let's say we do have a sudden decrease in the price or the rate, and now we have a flood of buyers back in the market. They buy up the inventory, they're looking for new houses to buy, but there aren't any because we stopped building. So what does that do? Right back to where we were. So that's the issue. Where is that happy balance? Where is that happy median? We need this to slow bleed out. And if this slow bleeds out, inflation starts to peak and we start to get the job market back, we might find a nice little balance there where we can get out of this. We're not in Canada's problem. Canada is beyond fucked. Canada is at the point where it would take 20 to 30 years at a slow drawdown for it to get to where it's supposed to be. And that's if it reversed today. It's either going to keep mooning or it's going to crash. Canada is a microcosm of this because Canada, unlike the United States where we have this vast geographical, area, we have this vast geographical area and we have people living in all of it because we have everything we need, right? Like we have all the different temperatures and climate zones and everything. We have populations everywhere. But with Canada, okay, which is up here, I know this is a watered down version, but I don't have a lot of room up here. Their population lives here. You have 38 million people that live here, 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 and a little bit of them here. Okay, that's it. The best thing that could happen to Canada is global warming. I'm sorry, I'm not advocating for it, but if I was Canadian and I was looking for a house, if I was a millennial Canadian and I wanted to buy into the housing market, I'd be fucking buying diesel trucks right now, okay? Do we really need polar bears? I feel like I feel like once Eskimos got McDonald's, I think we're okay. But yeah, if you're a Canadian and you're a millennial, you're buying a diesel truck and you're burning fucking leaves in your backyard because that's the only way y'all are going to get out of this housing issue. I'm sorry. That's just the truth. Okay, that's just the truth. All right? And there's more people leaving Canada for the United States than the United States going to Canada. That's why every time somebody's like, if this happens, I'm moving to Canada. I'm like, no, you're not. No, you're not. Nobody's moving to Canada. The only people moving into Canada right now are people that are immigrating there to work. We just need our boomers to die off? No, you don't. Your boomers don't live that long. They freeze to death or they move to Florida. All your boomers live right here in Hollywood Beach, Florida. Okay? The housing market over here is all money that came from Asia over the past 10 to 20 years that's hiding money from their bank accounts in Vancouver. There's empty houses everywhere there. It's international money that's in there. That's the problem. He's right. We need boomers to die off. They hoarded everything for themselves. No, they didn't. They just took advantage of what was available to them. Imagine, you know what's funny? I had this thought the other night. Boomers, what used to be a term of endearment. For those of you guys who don't actually know what a boomer is, after World War II in 1945, when all the troops came home, they were horny as shit. And a lot of fucking took place. And a lot of babies were born in this time from 1946 to 1960, okay? A lot of babies were born. And there was a lot of progress because after World War II, we had developed this ability to crank out a lot of manufacturing while the rest of the world was on fire, right? Because nobody attacked the mainland here. And then we ended up using our things to rebuild everybody that was bombed to shit. And then just kept doing that. So from the 50s into the 70s, we were manufacturing gods. Steel in Pittsburgh, cars in Detroit. I mean, you name it, we were building it. Then computers in the 80s and 90s. I mean, we were just a powerhouse. So the idea is that we were baby boomers. We were born during the boom in population, during the boom of the economy. They took advantage. The boomers had pensions and smoked cigarettes and dumped in the rivers because that's just what it was. Nobody knew they were doing anything wrong. Now we use boomers as a term, a derogatory term. But those of y'all that are calling them boomers as a derogatory term, get ready. Because in 20 years, they're going to start calling you the same thing. Those fucking millennials, man, 401ks and IRAs, all they cared about was that. All they cared about was buying a home. They didn't think about us and our thing and that. How could they? And you're like, what are you talking about? I wasn't as bad as the last generation, okay? I just was trying to take care of myself in retirement. I wasn't trying to get greedy. You weren't trying to get greedy? Well, tell that to me who doesn't have a 401k or Social Security or Medicaid or something like that. You hoarded all the money with your damn thing. And for those of you guys going, us millennials don't have any of that. I'm not making excuses for the last generation. I'm just saying as times change, okay? What we at our, like, for example, when your parents or your grandparents were in their 20s or 30s, they didn't go around thinking, yeah, fuck the next generation. I'm going to hoard everything. They on their own. Nobody thinks that. Even the people who thought they were doing right and well compared to everybody else look like bad people now, right? We learn from our mistakes as past goes on. It's not like all of a sudden we're the enlightened generation and we're perfect. So what I'm getting at is that what's funny when we say we need boomers to die off. And then what? So that you can inherit what they had and now you'll become the bad people? Like I said, I'm not making excuses for people in the past. A lot of people made a lot of mistakes in the past. Okay? A lot of people did. And a lot of people were just products of their circumstance.